Hey traders, it's Ryan from leprivatebanker.com. Just going to do a recap for Crude Oil here. I know Sebastian touched base on this on the forum, but I just wanted to just run over the top-down analysis that I said I'd do last week. So I'm just going to obviously run through the higher time frames very quickly here, and start off with the monthly bars, and you can see here that we've seen one time framing down for the last 1, 2, 3, 4, 5. Today, this month will be the 6th month of one time framing down since we put the high in for the year, and we're basically auctioning down to the low of this current bracket, and we have some low fractals here into the 70-70-30 and into the 70-75. So I mean, if we break through these areas, and there's nothing really much to reference down to sort of 67s and all the way back down to 32s. There's not really much to reference here. I mean, we can draw some fibs here just to see what's going on, and we've got the 50% into 73, and we've got some deeper pullbacks, but it's not something that I will be looking at personally, but that is something to look at. And so at the minute, like I said, we see this big engulfing bar last month, so this month's going to be interesting, and we're already showing an outside month from last month. So if we continue price exploration and we auction down to 75s and we don't find a buyer, then things could get pretty messy here for crude oil at the minute. I mean, we're already seeing the dollar breaking out into an uptrend, and since the quantitative easing's come in from the Fed, since the Fed stopped the quantitative easing, obviously when the Fed does these quantitative easing programs, the Fed prints money. So when they print money, they basically depreciate the dollar. So when the Fed depreciates the dollar, money goes into commodities, equities, and energies, and they drive prices higher, which in hand helps the economy, and it helps exportation, especially for, say, America. So exportation is obviously good because it provides jobs, and obviously jobs provide money for people that can go spend, and they can buy houses, and property goes up. It's just the cycle that it goes through. So now Fed have come in, they've ended QE4. We're seeing the dollar now breaking out of its current range that it's been in basically since they were doing the quantitative easing program, since I can't remember exactly when they started doing it, if it's 2007 or 8 or 9, but it was around there. And since then, you can, as I said, we've seen the dollar has basically been range bound in this current trade. I mean, before the crash, and there was highs up here into this sort of 120, and I do believe, I thought I marked that out. Anyway, so at the minute, like I said, we're breaking out of last year's highs, so the dollar is showing an outside year, and we're potentially starting to see an uptrend in the dollar. So if we see an uptrend in the dollar, this is potentially going to potentially push down other currencies. It's going to push down crude oil in energies. It's going to push down commodities such as gold, and we're already seeing the S&P top out at the moment. I mean, we might break out higher and continue this uptrend, but we are showing signs of balance at the current highs, and we are starting to see two-way trade and balancing come back into the market. So if we see a big blow off top in the S&P, we could see a large scale correction in this market on a macro perspective. So it's just obviously a few things to keep an eye on here, but as I said, the dollar is gaining strength at the moment, and if we do head up towards these higher areas and we break out this price range with a good trend on the dollar, this could again depreciate commodities, equities, and energies, etc., depending on how things play out. That's just what I'm looking at the moment. I mean, we're already seeing this play out in the market, so it's be interesting to see how this continues to evolve. But anyway, back to crude oil. I mean, on the weekly, you can see that we came in and we found some support into this $80 a barrel area, and since then we've been one time framing. And last week we just couldn't take out the one time framing. We are still one time framing. So on crude, since this previous balance, we've seen 1, 2, 3, 4, 5. This will be a 6th week for one time framing, and this is now a potential breakout. I mean, it's the first day of the month, and it's the first day of this week, and we're already seeing again price rejection from last week and last month. So we are looking at a very, very bearish structure at the minute. And I did highlight this last week regards how we closed out this month, and we closed out this month in a bearish structure. So, and as you can see here, we've just basically been rejecting last month's value since we opened this month. And obviously, we're still only one day into this month, but we just have to see what happens. I mean, on the quarterly and the monthly, I'll go through the monthly. I mean, last month we see this big elongation, selling elongation, imbalance in the market, and all of a sudden we see this balance area come in. And basically what happened is buyers met sellers, sellers met buyers, and we just see this two-way trade balance come into the market. So what is this market telling me? That we are seeing fair value here at $80 a barrel. So if we're seeing fair value here at $80 a barrel, then potentially we can see another wave of selling coming in and we can break down further. I mean, we was trading $110 a barrel, and now we're trading $80 a barrel, and these prices are currently showing fair. So until we find a buyer and we see some buyers come back into this market and we see some higher volume put in, this market's telling me that we are at fair value at the minute. We can see on the yearly that we are putting in a larger value than last year. We've seen this big accumulation at the bottom of this year, and we've seen a clear breakout from this upper distribution where we see balance on the year. We are very out of balance and we are just trading quite far away from value, but we are continuing to pull in sellers here. From this running meters VWAP, you can see that since we see this large scale sell off, there's been a seller, bear with me there, sorry my phone. There's been a seller present in the market selling the developing value area low, and every time we've tried to come back into value, we've seen aggressive selling coming into the market. And we on Friday we see the market capped. Let's quickly get my other charts on. So on Friday we saw the market capped into the bracket lows here. And we opened gap down and we found a buyer and we put in this real poor low. So what happened is the market couldn't trade lower, sellers dried up, and then we see buyers coming into the market because that's what we couldn't trade in lower. So what happens when we can't trade in lower? The buyers come, they get suckered into the market. So then today what we saw is we saw an open just outside of Friday's range, and we see selling straight back in. So we see a gap up, we close this gap that was open, we open into the 5 exponential moving average, and we see sellers straight off the open. And what this started to look like until this H period come in was a shortcut, a long liquidation profile. So any longs that got accumulated into this on Friday's trade, they started to cover as prices didn't move higher. So they start to come in, they start to cover, and that obviously brings in more shorts. So there's obviously more sellers coming in today. So selling. We see balance in here, and all of a sudden someone came in, they spiked it up. A market maker, it could be hedging, as Ben was suggesting, and basically they ran any weak sellers out of the day. So anybody who was selling on today, weak sellers, they would have got stopped out on this big spike up. As soon as the market spiked up, it cleared out all the inventory in the book today. We see a seller come back in and they spiked all the way back down again, running any buyers that were in the market from Friday and any buyers that accumulated longs on today. And this caused this massive flush down of all these stops getting hit and more sellers coming into the market. So you can see how the auction since Friday has played out. It's very, very clever how everything's happened, and it's very interesting to watch this happen. So. But anyway, again back to the higher time frame stuff. We've basically seen a 2-week balance there. So we see a 2-week balance. We see this big engulfing bars. We see sellers coming to the market. We came to here. We see fair value in the market, and we see a 2-week balance with lower lows. And today we've broken out, so we could see some big downside now. I mean, the only reference that we can see is this 77.28, so we need to be very careful around this 77.28 because we could see an auction below this level and we could find a buyer present. Who knows? But at the minute, obviously, the path of least resistance is to the sell side, so this is something to continue to monitor here. I think I'm going to pretty much leave it at that for today. I mean, we've been in this balancing range, like I said, and we've seen this micro balance come in and two-way trade come in, and this bracket has been very very important. I adjusted it to this today, and we've now seen a seller break down, and we've closed outside the bracket. So the expectation tomorrow is now open gap down, and you can see the next support levels that I'm looking at below here. So that's pretty much it for crude oil, what I'm seeing at the minute. I mean, like I said, we've seen this balanced two-way trade come back in, and now we've seen the next breakout, the next wave down in this market. So we just have to monitor this auction process very carefully. We need to keep an eye on the US dollar, and we need to just keep our eye on all the higher time frame stuff that I've just gone through here. Anyway, if you do have any questions, please do not hesitate to ask, and I hope you I hope you all trade very well this week, as you might see some increased volatility. So be aware of that. Anyway, take care, and I'll catch you tomorrow. Goodbye.